Hello everyone and welcome back to a new stock market video. Now I haven't done one of these videos in a couple of months. Apologies, I've been super busy with my business. If you don't know, I own two businesses here in the UK, and that is how I'm able to fund my ISA. So we've got a video coming out today in terms of my ISA account and what's happened over the past couple of months because yeah. As you know, I have maxed out my ISA for the last couple of years, and I've been dollar costing averaging every single day up until April 5th, because on the first financial day of the year, sorry, in 2022, I did put the maximum 20K in the ISA for the year, and I've still been dollar costing averaging that over the year to get down to zero to start the new financial year of investing. Okay, now I want to give an update on the ISA and seeing what's going on. So as you can see, the ISA value is currently £35,810.49, with an account value of £41,739.87. So if we compare this to my last video, you can see that this is at £40,238. So we've made over 1.5K in about 2 months, which is very nice. And by the way, Happy New Year to you all. I hope your 2023 of investing goes very well. So let's see what's happened over the last few months. So we have all of the same funds here. You can see INRG, iShares Global Clean Energy, is currently up £100 and 98p, or 3.03%. iShares Global Water is up £194.55p, or 8.313%. Physical gold here is up £53 or 3.09%, and the FTSE 100 is up 5.49% or £188. Vanguard FTSE All World High Dividend Yield is currently up £89.68, 3.93%. Vanguard FTSE Emerging Markets is up 2.6% or £104.30 there, and the Vanguard S&P 500 VUSA, which is my biggest holding. The reason it's VUSA is because I'm in the UK and we have access to VUSA instead of VOO, but it's the same thing. It holds the same stocks. It's the same ETF tracker, and that is currently up £753 or 4.39%. So you can see I currently have £17,916 in the S&P 500, which is my biggest holding to date. Now, if we go into the pie here, you can kind of see my asset allocations. We got the S&P 500 at 50% of everything, because I believe in this long term. It's basically just investing in the entire US stock market. I don't think you can go wrong with that. So that is why I have gone ahead and invested the majority of this portfolio in the S&P 500, and I will continue to invest the majority of this portfolio into the S&P 500. We've got Global Clean Energy here sat at 10%, FTSE 100 at 10%, FTSE All World High Dividend Yield at 10%, Emerging Markets at 10%, iShares Physical Gold at 5%, and Global Water 5%. So this physical gold, I like to have gold in my portfolio. I do own some physical gold as well in a vault over in Singapore. But I thought I'd add it to the ISA. You can never, you can't really go wrong holding gold. It's just appreciated since the dawn of time. And I think having a percentage of your portfolio in gold, especially for me at my young age, I'm 21, so I've got a long investing journey to go. So I think having a percentage of my portfolio of gold does make a big difference. And then we also have this global water ETF here at 5%. Again, more of a risky play. But again, I think, all of these are funds, all of these are ETFs, right? I don't play with single stocks in my ISA. My ISA is more of my retirement fund, or one of my retirement funds, tax-free. And I'm going to go into what I'm doing next year at the end of the video, once we've gone over the portfolio. So yeah, this is how the portfolio breaks down. Again, 50% in the S&P 500. Again, you can never go wrong with owning the entire US stock market, so that's why I put the majority in there. Global Clean Energy, again, it's something that's having a massive push right now around the world with Global Clean Energy, which, again, is pretty powerful. And we can see it's gone up 3% over the last few months, which is good to see. We got the FTSE 100, which is obviously the UK's equivalent of the S&P 500, but for the top 100 companies in the UK instead of the top 500 for the US, which is up 5%, which is actually beating the S&P 500 in terms of percentage gains there. Since Rishi came into the Prime Minister role, this has been pumping quite nicely. All World High Dividend Yield, again, I just thought I'd have some dividends trickling in this portfolio as time goes on. So that's up about 4% there. We've got the emerging markets, which again, I know it's another pretty risky one, but I am around for a while, I would hope anyway, in terms of my investing journey. So I thought I'd add emerging markets into this as a 10% as well. And then, of course, we have those 5% ones. So what's happened over the last 3 months? Well, you can see that we were sat very bleak around 4th of November at 20K invested. So over the last 3 months, I've gone ahead and invested about 16K more into this. And you can see we were down about £93. And it slowly kind of built back up where right now we are at the highest point we've ever been in terms of gains, as well as the invested amount. Okay, I started investing in this portfolio in March of 2022. And then I did go ahead and chuck in, a good, this is not right. I've invested way before March 22. Yeah, so I don't know why this isn't showing it, but whatever. Because I have, 40K in here, which is 2 years worth. So that would have been 21, 22, and then 22, 23. Okay. So yeah, there you go. You can see ISA utilization 100% for the year, and I can go ahead and deposit more on 6th of April 2023, which is very nice. And I'll just keep dollar cost averaging into this portfolio as the time goes on. Now, of course, the market has been going up, but we are looking at an impeding kind of recession for the next for the next year. So I would keep that in the top of mind when looking at investing. But to be honest, and I'm not a financial advisor, right? Don't take any of this as financial advice. I'm kind of just documenting what I'm doing at 21 with my investments. But I mean, the majority of it being in the S&P 500 for the long term, when I'm like 30, 40 years time, this is going to be massive. Now for you, depending on what age you are, it may look differently. It may be a different story completely in terms of where you're putting your money, and that's completely fine. Everyone has their own goals with their investing. I don't own a house yet or anything like that. So, I'm being more aggressive in these early years, making some of these tax-free gains and then moving it into safer funds as time goes on. So, yep, this is what I'm going to keep adding to my portfolio over the next year. We also have this almost £6,000 here to go ahead and put in over the next 2 months as we lead into the next financial year. But yeah, so going forward over the next couple of years, I am going to be looking at purchasing my first house here in the UK. So because I own a business and being self-employed, it's a bit difficult. You kind of need to prepare for it in advance because lenders want to look at 2 years of accounts and all that good stuff. So I kind of have to prepare those accounts over the next 2 years to make sure that I'm earning enough where I can get mortgaged on a good enough amount for the house that I want to buy. Okay. So over the next year, I'm still going to be maxing out my ISA, but I'm going to be putting £4,000 into a lifetime ISA, because if you do that, then you're going to go ahead and get a 25% bonus from the government. Plus, I think Moneybox gets like a 2 to 3% a year interest rate on that money at the moment. So just a cash LISA where I will put that 4K in, and again, I'll get a tax-free £1,000 additional from the government for the next couple of years, which will go ahead and be putting into my house purchase. And the reason I'm doing that again is because of that 25% bonus from the government, and it's short term. I don't think I can make 25% from the markets in the next 2 years. I could be completely wrong. But yeah, so I'm going to be putting that money into the LISA, and then the rest of the 16K is going to be going to my stocks and shares ISA. Okay. So that's the reason I'm doing that. And again, with the LISA, if you didn't know, in the UK, you can only use that money when you retire, which if you're going to be retiring, I don't think a LISA is the best way forward. You may as well do a self-invested pension. But then also, I'm going to be putting that 16K into this portfolio. Now, I need to be careful trading 212 here because I can only do another, I can do another £25,000 invested before I hit that cap. So if we go over to my account here, okay, you can't see it, but I have about 25K in my general investing account as well. So I'm at about 65K invested on trading 212. So another 20K and I will be at that cap of £85,000 invested just on trading 212 and the FCS protects you up to 85K per platform. So I need to start thinking about other platforms this year, because I do think I'll invest more than 20K over this year. So I need to go ahead and think about new platforms to go over. I am going to be starting Vanguard. I'm going to open a Vanguard account and put some money into that one, into some of their funds. But yeah, I need to start thinking of another brokerage. Maybe something like Free Trade's a good option as well, especially for my general investing account. And then for the ISA, maybe something like Vanguard, AJ Bell, Hargreaves Lansdowne, probably one of those three. I need to make my mind up. Fidelity or Nutmeg or one of those, right? I'll make that decision soon enough over the next year because we've got a while yet. We've got an extra 20K. So, but yeah, also another thing for this year is I am starting to invest in a self-invested pension, a SIP. Now, again, similar thing, the government gives you 20% extra when you deposit. So if you put in £800, the government will give you, if you put in £1,000, the government will give you £200, so that your account balance will be £1,200 when you've only invested 1,000. And the reason for that is for tax relief. Okay, you essentially claim that tax back. It's a bit, because I'm self-employed, I can't then go ahead and deduct that £1,000 as profit from my profits. But what I can do is, because the government give that back directly into the stock account within about 4 weeks, so it's essentially tax relief, and it's essentially, you're getting that tax back in terms of what you paid on the account. And the maximum contribution for that is 40K a year. I don't think I'm going to max that out, because with the SIP, with the pension, you can only start taking that money out when you're 50. I think it's 55 at the moment, but going up to 57 in 2028. So I'll be obviously 57 by the time I can even touch that money. But if I start doing this in my early years, in my 20s and 30s, I've basically got a guaranteed retirement at that point, because I would have invested enough in the SIP, and that compounds over the next 30, 40 odd years, where I basically have a guaranteed retirement by the time I'm that age. Now, I hope to retire before then with my other investments and businesses, but it's nice to know that when I'm 58, I can start taking from that pot. Okay, so that's what I'm also going to be doing next year, aside from my ISA and aside from my general investing account. I'm also going to be investing in a SIP, which is going to be with Vanguard. I have my SIP with Freetrade at the moment, but I think I'm going to open one with Vanguard, just because, we have to look at, do I think it's going to be here in 38 years from now? And with Freetrade, I don't know. It's very new. With Vanguard, I can confidently probably say yes, because it's been around for so long. It's more trusted. Fees are very low. So I'm looking at my SIP with Vanguard. And yeah, I think those are all the updates for the ISA and what I'm doing this year. Now, in my next video, I'm going to be showing you my general investing account, my dividend portfolio, as I'm aggressively growing that, because my goal long term, after I move the cash flow into the business, I want to put, obviously 20K a year, 20K a year into an ISA is non-negotiable for me. That's a minimum requirement. And then anything above that, I invest into dividend paying stocks. Now, the reason for that is because I want to get to a point where I'm now living off of, or dividends are paying for my lifestyle, which I want to be earning about 50K a year minimum from dividend stocks, which, if we're looking at an aggressive 10% a year dividend plus capital gains growth, you're looking at a 500K portfolio. But if you're looking more conservative at, let's say, 5% per year, it's going to be $1 million. So we got a while to go yet. With my 25K sat in there when I need to get to $1 million, but it's growing. So yeah, and ideally, I have thought about this, and ideally, I do want a 70-30 split, 70% ETFs, 30% in dividend single stocks. However, I'm kind of being on the more aggressive side. I'm putting anything that I earn above 20K that I'm able to invest is going straight into dividend stocks. So let me know down below what you think of that idea. I have also set up a dividend tracker, so I will start tracking it on there. But yeah, we'll talk more about this in the dividend video. Thank you all for watching. I hope you have enjoyed. Subscribe if you're new. I'm going to start doing regular updates on this channel again, multiple times a week. Thanks for watching, and I'll see you on the next video. Goodbye.